Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today I'm here with Amrit Robbins of Axiom Exergy. Amrit, thank you for joining us.
Yeah, absolutely. Thanks for having me.
So what was your background before joining Axiom? What did you do before this?
So before joining Axiom, my goal has always been to basically kind of accelerate this clean energy future. So, I went to Stanford back in the day with the idea I wanted to go into political science and with the stroke of a pen through policy, kind of change our climate future and change our renewable future. So I went to Stanford, ultimately caught the startup and entrepreneurship bug, switched to engineering, and because I realized that ultimately, in order to generate really true change, you need to have scale. And the way to get scale is by kind of aligning best value decisions with the sustainable choices. So long story short, I realized that technology and especially economical solutions to these types of problems were much more attractive solutions than policy-driven ones for me. And so I went into energy tech straight out of Stanford, worked at an energy services company for a while. While I was there, our largest customer was a major national grocery chain. And so through that process, I got to develop a $100 million project where we were basically figuring out every possible way that we could reduce their operational costs and complexity, specifically related to energy and water, and put that whole thing together in a big project for them and implement it and finance it. And so it was through that process that I got intimately familiar with the U.S. retail grocery market and U.S. grocery refrigeration market as well. And so that's how I started to realize that there's this huge opportunity in this space. And Axiom is a pretty direct result of that experience. So after leaving that energy services company, that's when my co-founder and I ultimately connected, and we coalesced around the idea of addressing this enormous untapped opportunity and applying some tech into this market that was previously relatively overlooked in a way that we could achieve a lot of our goals related to climate and transition to renewables, et cetera.
Well, great. So what's your advice for people investing in this grocery refrigeration space?
Yeah, good question. So let me back up a little bit and talk about the dynamics of the industry. So U.S. retail grocery as an industry is interesting for a lot of reasons. There's about 39,000 grocery stores in the United States today, and it's a very high volume, low margin business. So in the U.S. today, grocery stores are bringing home, at the end of the day, net profit after taxes of around 1.5% per year. So enormous volumes. A lot of stores are actually selling out the entire store every single day. And think about how much food is in a single grocery store. It's kind of unbelievable. But these folks do have razor thin margins. And so what that's led to is a climate where the top 20 grocery chains have consolidated quite a bit, and they control over half of all the stores in the country. So very consolidated industry. And in addition to that, decision-making within these organizations, these folks have had to figure out ways to become more and more efficient over time to eke out those tiny margins, those razor-thin margins. And one of the things they've done is they've completely centralized decision-making and management. So in this particular segment, it's really kind of 20 top corporate executive teams that are overseeing over half of all the grocery stores in the country at these top 20 chains. And so the industry itself is not growing that fast in terms of total number of stores. So a lot of what's happened in the last couple of years is there's been a lot of fear and uncertainty, and that's been driven by tech, honestly. Tech has been the elephant in the room. It's been the factor that is destabilizing this industry, or at least destabilizing sentiment in this industry. One very strong example of this is Amazon's purchase of Whole Foods and entry into this market. Ultimately, what that did was it caused the market caps of the top 20 grocery chains to dip enormously in the days following that acquisition because everyone was running scared of Amazon entering the space. And since then, it's really had a chilling effect on investment in the space. Because ultimately, these top 20 chains are looking around and trying to figure out, where does it make sense to invest capital dollars in this space? are customers going to continue showing up at my grocery stores and buying food every week? Or are they going to expect more delivery? Are they going to want more app-based services, et cetera? So there's a lot of questions about the future of the industry. And as a result, that has kind of trickled down into a lot of questions about the shape of what we call the cold chain. So the cold chain is essentially the series of buildings and trucks that move cold food around from the field to the fork. And so in the cold chain, one step along the way is the retail grocery store. And that particular segment of the cold chain is now looking around and trying to figure out, do we even have a place in this new economy? And if so, how big is it? Or are folks going to be buying so much online that the retail grocery store itself turns into more of a distribution hub for contracted shoppers or something along those lines? And we're seeing that in a lot of markets already, growth in those categories of the grocery market. Ultimately, so I mentioned chilling effect on infrastructure investments. So folks are kind of sitting on what they have. They're not building that many new stores. They're not heavily reinvesting in new refrigeration equipment over the past couple of years. So what that's done is that has negatively impacted the refrigeration industry. And the refrigeration industry that serves the grocery industry is another kind of really interesting industry. I'm throwing a lot of information at you right now, but kind of these market dynamics are really important to understand the broader picture. In the refrigeration industry in the US, there's really three, or depending on how you look at it, four key players who are selling refrigerated display cases, and then the large central refrigeration systems that are in the back of most grocery stores and refrigerated warehouses and food processing, packaging facilities, et cetera. And so that industry as well is, the interesting thing about that industry is that the core technologies haven't changed in over 100 years. It's still basic vapor compression refrigeration. There's been some changes in the fluid types and some of the mechanics and some of the controls, but at the end of the day, that same core technology still reigns supreme, the same technology that was being used in the early 1900s. And so in that space, these three or four companies have gotten to the point now where they are selling a almost completely commoditized product. And now when a new grocery store is built, the owner of that grocery store is not going to one of these vendors and buying a complete solution. Instead, they're hiring a third-party engineering firm to mix and match major system components from the three or four large manufacturers. That's how commoditized the industry is. And so basically, when new stores are built now, all of the majority of the purchasing decisions regarding refrigeration are driven by first cost and first cost alone. And so that's led to increased commoditization, and these vendors are beating each other to death on price. And what you end up with is a situation where folks are stripping warranties and service out of their offerings as well. So again, a market that's just absolutely ripe for retrofits because of how commoditized it is and because customers are essentially providing their own service and warranties to these types of equipment. So that industry has been slowing down a little bit as well over the past few years as a result of this kind of the big seismic shifts that are happening in retail grocery and questions about the future shape of the cold chain. So does that answer your question, Hall?
Yeah, very helpful to see the dynamics here. Grocery refrigeration seems like it's a large space, but probably not growing very fast. And as an investor trying to figure out where's the value to be captured in this process, that's kind of the question we're getting into now is how do you take this industry with these dynamics and make a successful startup business out of it?
Yeah, so basically, I believe the answer to that, and I'm of course very biased here because I'm the CEO of a company that's doing this, but I believe that the answer is applying some of the very generic data and artificial intelligence playbooks to these industries that have been applied in so many adjacent industries successfully and unlocked enormous amounts of value. And so this industry, grocery refrigeration specifically, they are basically not using data today. In a lot of cases, if you go into a typical grocery store, what you're going to see is a large central refrigeration system in the back of that store. And then there's going to be a computer which is operating that refrigeration system and monitoring it. And in fact, believe it or not, these customers have already invested in large networks of sensors and electronic components throughout the store so that central computer can monitor and control the entire extended refrigeration system. There's typically over 1,000 different monitor and control points that computer is touching. However, nothing is being done with the data that's collected from that computer. So it's collecting data from 1,000 points every 5 seconds to 1 minute, and then that data is being stored on site for about 2 weeks. And after 2 weeks, the data is thrown out the window and they just simply overwrite it. And so what's happened here is that customers realize there's benefit in generating data and understanding what's going on. The refrigeration manufacturers and control manufacturers have realized that there's value in applying kind of computers to this industry. And so that's really what's happened. They've made it to the 1990s. They've applied computers to the industry. But no one has figured out that after you apply computers to the industry, then you're generating enormous amounts of rich, valuable data. And so at this point, the data is being generated, and then it's just being thrown away. And so what we found is that we can step in. We at Axiom have realized that we can step in and essentially gather all that data that's already being captured. So we gather that, we send it to the cloud, and then we run it through artificial intelligence engines. And the Axiom Cloud is what our product platform is called, ultimately uses all of that data in order to provide a series of automated, really valuable services. And so we're unlocking the data, and what we're doing is we're using the data to unlock the flexibility and the intelligence that already lives inside of these assets. So again, just to recap here, we are picking the data up off the floor that's being thrown in the trash. We're sending it to the cloud. We're running it through an artificial intelligence engine, and we're using that to change how the refrigeration system operates on an autonomous and iterative basis. And so this is a really kind of lightweight, non-invasive retrofit for those refrigeration systems on the ground. And again, covering ground I already touched on here, but we are essentially applying artificial intelligence and the data analytics playbook to this industry in a way that's been applied to many adjacent industries, but we're doing it here for the first time. And our team is really uniquely positioned to address this particular industry opportunity for a variety of different reasons, which we can get into later.
So what kind of cost reduction or performance increase do you get from using AI techniques with this data? And what are some of the services that you can now do that you could not do before?
Yeah, great question. So basically, we offer our customers through the Axiom Cloud platform, our customers can subscribe to, right now, we offer two services on a subscription basis. Those are called Virtual Battery and Virtual Technician. And so with Virtual Battery, what we're able to do is if you think about low temperature refrigeration is essentially, it's a series of freezers throughout a grocery store, and they're holding product like ice cream, frozen meat, frozen peas, frozen vegetables, etc. And so from a operation perspective, those freezers, there's a maximum temperature set point which they can be set at, which is typically around 0 degrees Fahrenheit or maybe negative 20 degrees Celsius. But there's no minimum temperature set point. So you can make that food much, much colder without having any negative impact at all on its quality or its safety or anything like that. And so what we realize is that there's an enormous degree of flexibility there. And so virtual battery application, what it does is it unlocks that existing flexibility in the refrigeration system and in the frozen product itself in order to make a virtual thermal battery appear out of thin air. And so when I say that, what I mean is that we are able to provide the exact same services as the big, expensive Tesla lithium-ion battery if it was plugged in at that same building. And we're able to do that without any hardware at all. The way we're doing that is by predictively pre-cooling the frozen goods in that store. So we might drive the temperature of the frozen goods from 0 degrees Fahrenheit down to negative 20 degrees Fahrenheit. And that is the same thing as charging a Tesla battery. So that's storing a useful services for later use. And then the next thing a Tesla battery does is it discharges in order to reduce the building's energy consumption when it's economically beneficial. So that's to help manage demand charges or to arbitrage units of energy from expensive periods to cheap periods, or to generate new revenue streams such as demand response. So in other words, the utility company writing you checks for being a more flexible energy consumer. So in order to generate all that value, a Tesla battery discharges, it dumps energy back into the building. What the Axiom's virtual battery does, which is analogous to that, is we turn off selectively and we modulate essentially the really power-hungry compressors and condensers which are operating the refrigeration system and you're consuming over half of all the electricity in the entire store. And we're turning those down, we're making them consume less energy or turning them off entirely. And we allow the temperature of that frozen food to slowly rise back up to its original temperature set point. So maybe it goes from -20 back up to 0 over a period of a few hours. And so that is analogous to discharging an electrochemical Tesla battery. So again, virtual battery, we provide the same exact services as electrochemical battery without any of the hardware, and we do that by predictively pre-cooling and then intelligently load shedding the temperature of the low temperature food.
What kind of cost savings would the average grocery store receive for using the system like this? Is there a ballpark that you've benchmarked?
Yeah, virtual battery, typically for our customers, we're typically generating anywhere from $10,000 to $30,000 a year in value for the virtual battery service if our customers subscribe to that. But in addition to that, our customers can also optionally subscribe to our other service, which is Virtual Technician. And that generates anywhere from an additional $20,000 to $60,000 a year in value. And so when I say value, it's in much more than just savings from your operational costs. And Virtual Technician, essentially what it does is it's leveraging this incredibly rich and diverse data set in order to perform predictive analytics, essentially using a digital twin of the refrigeration system, which lives in the cloud and is constantly being updated based on new data. And it's using that model to identify two things. Number one is opportunities to make the system more energy efficient. So we call that ongoing retrocommissioning. And number two, it uses that digital twin model and essentially an artificial intelligence engine in order to identify systems for the, so we call that one predictive maintenance. So all of that fits into the bucket of Virtual Technician. And the idea here is that when customers subscribe to Virtual Technician, they are able to dramatically reduce kind of the worst case nightmare scenario for a grocery store, which is an unplanned refrigeration outage, which can cost hundreds of thousands of dollars of lost product, angry customers, reduction in customer loyalty, angry employees, big dumpsters full of spoiled food in the back of your store, et cetera, and also dramatically reduce operational costs associated with wasting a bunch of energy or using refrigeration technicians very inefficiently, et cetera. So again, really quick recap here. The Axiom Cloud platform is basically, it's a non-invasive retrofit that bolts onto the wall in a grocery store and connects to the cloud. And when our customers plug their grocery store into the Axiom Cloud platform, then they can optionally subscribe to Virtual Battery and or the Virtual Technician service. And so overall, that's generating anywhere from $20,000 to $70,000 in value per year. And we charge them a subscription fee in order to receive that value.
So what are some of the challenges in bringing this technology to this marketplace? It's a traditional marketplace and it is a new technology, but what did you encounter when you did this?
Yeah, really good question. So we actually started this company back towards the end of 2014, early 2015. And this was not our original product. Our original product is called the refrigeration battery, which was a hardware solution. It's essentially a shipping container full of salt water. And we were freezing and melting that tank of salt water in order to store and release thermal energy. So somewhat similar concept of thermal energy storage to provide the same services as a battery, but rather than using data and artificial intelligence and software, it was using a lot of hardware. And so with that platform, with that product, we ran into a lot of barriers associated with upfront cost, with footprint, and then of course, folks don't want to expose themselves to too much risk of working with new vendors, new products, new concepts, especially ones that take up a lot of space and cost a lot of money. And so the Axiom Cloud, we actually built the Axiom Cloud platform originally in order to manage our fleet of what we call the refrigeration battery hardware systems. That was the original use case of the Axiom Cloud software platform and the artificial intelligence engine. But it turned out to be so valuable when we deployed it, it more than doubled the value that we were seeing at each one of those individual refrigeration battery deployments. And so we ended up, our investors and our customers really strongly desired us to release the software as a standalone solution. And so we did. That's how the Axiom Cloud and the virtual battery were born. And ultimately, Virtual Technician was another kind of serendipitous accident in some ways. And what happened there was we deployed the Axiom Cloud and the virtual battery service to some grocery stores in Northern California. And at one of those stores, we started seeing some really confusing results. The artificial intelligence engine essentially was throwing errors because its models were producing non-physical results, so results that violated the laws of physics. And so, of course, our engineering team said that doesn't make any sense. And we dug into the data, we dug into what was happening with that artificial intelligence engine. And we realized that when you look at a couple different data streams and you look at the correlations among them and the trends over time, it's very apparent that that grocery store was headed for a catastrophic refrigeration system failure. And so we really quickly, we got on the phone with that customer and we told them, we said, this is what is going to happen. It's going to be bad. It's going to happen really soon. And the customer said, thank you for letting us know. We'll take it under consideration. And 2 weeks later, exactly what we said was going to happen actually did happen. And that customer suffered 2 days of downtime for their refrigeration system, which is, again, it is the nightmare scenario for a grocery store, is having your refrigeration go down in an unplanned fashion. And so the customer, they obviously cleaned up the mess and they came back to us and they said, hey, remember that time you told us that something was going to happen before it did? If you turn that into a service, we will pay you for that service. And that's how Virtual Technician was born. So very customer driven. And that's where we are today as we offer the Axiom Cloud. We're selling to grocery stores and big maintenance providers, third-party maintenance providers for grocery stores throughout the US. And we're entering other North American markets as well this month.
Where do you see this going in the future? What other services do you think might come out of it going forward?
That's a really good question. So basically right now, we have a series of hypotheses about what's coming next. And I won't get too much into the roadmap because we're still running down the likelihood and also the essentially how interested customers might be in each one of these services. I don't know what the exact answer to that is right now. One thing I will tell you is that Virtual Technician, we are in the process of building a refrigerant leak reduction module. And so I'm actually going to zoom out a little bit here for a second. One of the reasons that this industry is so interesting, and one of the ways that we've been able to recruit what I believe is a world-class team, is because of something that's really interesting in refrigeration specifically. So there's an organization out there called Project Drawdown. Project Drawdown looks at, they stack up all the different potential solutions to the climate crisis, and they order them by essentially magnitude of greenhouse gas equivalent reductions that are possible. And that list was released last year, and it confirmed something we already knew, which is that refrigeration is the number one item on that list. It is, according to this organization at least, the single largest opportunity for greenhouse gas reduction equivalents available to humanity right now. And so it's a little bit mind-boggling to think about. But basically, breaking that down a little bit, refrigeration, not only is it a massive consumer of electricity and energy, and actually, you know what, I misspoke. It's not just refrigeration, it's refrigeration and cooling, which is number one on this list. So cooling off food, cooling off computers, cooling off people and buildings, et cetera. But cooling obviously consumes an enormous amount of energy. It's very, very energy intense. And the number of air conditioners and refrigeration systems in the world is growing really rapidly, especially in emerging markets like India and China. The other element that sometimes flies under the radar is the refrigerant itself. So if you were to take a hammer to a refrigerator or an air conditioner or a big grocery store refrigeration system and you broke it, a refrigerant gas would come shooting out of the pipes. And that refrigerant gas is a really it's a highly engineered chemical, which performs a great function, but it also is an incredibly potent greenhouse gas. And so that's what's called direct emissions, is leaking refrigerant. And then indirect emissions is consuming electricity, which then, of course, means burning a bunch of coal or a bunch of gas at the power plant. So between the direct and the indirect emissions associated with refrigeration and cooling, that's what makes it sit at the very top of this list of potential greenhouse gas solutions. So, Paul, can you repeat your question one more time? I kind of got off track there.
Well, so what future services might come out of this? And as you're talking, I was thinking along the lines of carbon tax credits and carbon sequestration and other things that in the next stage, I think we're going to see a lot of climate change technologies that come to bear. And you're kind of on the leading edge of that with what you've got there. And there's a way to monetize that for sure.
Definitely. So thank you for getting me back on track here. Bottom line, short version of the answer is that we're coming up with refrigerant leak reduction modules. And because of this incredibly rich data set that we have, we're able to predict leaks before they happen, detect leaks earlier when they do happen, and fix them faster once they happen in order to reduce refrigerant leak rates quite a bit. Right now in US grocery stores, there's a couple thousand pounds of refrigerant in your typical grocery store in the US. And the typical leak rate, which is acceptable and is authorized by the EPA, is 25%. So that means that you're losing a quarter of all your refrigerant in your pipes every single year. And that's an acceptable leak rate. So a little bit mind-boggling to us. And so we're unleashing the AI, our AI, in order to help reduce that substantially. So that's one of the features that's coming up next for the Axiom Cloud platform.
Well, great. Well, in the last few minutes that we have today, what else should we cover that we haven't?
So one thing that I think is really relevant is we've talked a lot about refrigeration. We've talked a lot about retail grocery. But in a lot of ways, Axiom is an artificial intelligence company. We happen to have very deep roots in refrigeration system design and operation and maintenance. And we also have very deep roots in energy and energy markets, and basically how to make buildings and systems more energy and efficient and better grid citizens, essentially, by making them active, providing active power management. But kind of the third key area where we have expertise is in artificial intelligence, machine learning, IoT. And so what we're doing here, we happen to be, to our knowledge, the only team on the planet that kind of combines expertise in all three of those areas that I just mentioned. And so, of course, there are folks out there who are better than us in each one of those individual categories, but none of them have all three. And all three is what's required to address this particular market opportunity. And so one thought that I think is really important to share is really what we're doing. We are applying the artificial intelligence playbook to cooling and refrigeration systems today. And that is not a new concept. Applying artificial intelligence to new industries, that is kind of a tried and true business model at this point. Examples of this in adjacent industries are aviation, where Airbus is using autopilot for landings, GE is using engine predictive maintenance, and power generation. Google's increasing efficiency using AI, reducing downtime, et cetera. In automotive, these folks are supposedly saving $173 billion a year across supply chain, driven by artificial intelligence, as well as, of course, self-driving cars, et cetera. In agriculture, they're using artificial intelligence for early detection of diseases, pests, and poor crop nutrition, et cetera. So bottom line is applying artificial intelligence to new industries is a well-known strategy. And that's what we're doing in this industry. We're going into an old, kind of overlooked, underserved, and very large and kind of old and stodgy industry. And we are bringing the 21st century of data and artificial intelligence to this industry and unlocking an enormous amount of value in doing that. And we happen to be the best position to do that right now. So that's where we are right now. We sold a lot in 2019, and 2020 for us is about moving from those initial sales. We released the Axiom Cloud in June 2019 and sold over $1 million worth of product in the second half of 2019. And that we now feel very confident in our product market fit with this new artificial intelligence platform. 2020 for us is about raising this next round of capital and moving solidly into growth mode. We're looking to achieve at least 4x growth this year, if not more. And we have the customer pipeline to do that right now. So it's a very, very exciting time for us.
Sounds like a great business opportunity and sounds like you're making great way with it. I appreciate you sharing that with us today. How best for listeners to get back in touch with you?
So you can obviously reach us through the 10 network, or feel free to reach out to me directly. My email address is available on our profile. My name is Amrit. I'm the CEO and co-founder. Yeah. Or come find us on our website.
Great. We'll add those to the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thanks a lot.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.